Hey everyone, Brian Balon here, your Greater Phoenix real estate agent. And today I have a real estate market update for you for the Greater Phoenix area. And if this is your first time joining, I appreciate you listening in. And I hope to provide more value and more videos like this for you in the future as you navigate these ever changing and rapidly changing times. And with that said, if this is your first time viewing this video or seeing me, I appreciate you checking this out. It's my first LinkedIn Live, and I hope to bring more of these to you just to help you stay in touch with a very large investment or investments in your world, in your life, and to be able to bring that value to you. Of course, if you have any questions, you can always comment or message me. Would love to chat with you about that and provide any additional insight for your particular situation, as I can get as local as your neighborhood to the zip code to the city that you're in, and get you different demographic information, market information regarding your home values or what have you. So, with that said, let's talk about the February 2023 market. I'm going to start with just some off the cuff observations that I've seen with our clients that we've worked with in the past month or two. So, first thing is that one, for existing homes in market, and I've worked with clients that are in Mesa, in Gilbert, in Laveen, in Phoenix, Glendale, right? So all various parts of town, Scottsdale even. What we're seeing is actually a market that is more alluding towards a seller's market. And here's what I mean. So I'll give you an example. We had a client in Chandler, for instance, that just closed in January. And as we were looking in Chandler, we had actually a multiple offer situation at the beginning of the year. And it was a multiple offer situation of over 10 offers. And I haven't seen something like that since 2021, right? It's been a while. And maybe that isn't a while if you look at historically, but we were able to, at one point in third quarter, fourth quarter, we were able to buy homes at 5 to 10% under price, and now we're looking at either full price or slightly above. So that market is showing signs again of a 2021 market. Now we're nowhere near close to that. However, it was just something to note that we were seeing multiple offers again. Now, that's a few situations, and they're not as common as it was back then, back in 2021. It was something to note. Also, what we're noticing is that sellers are actually holding on to their pricing more. So meaning that if they're asking price, whatever their asking price is that it's getting closer. The negotiations and where the sellers are wanting to keep their offers are actually getting closer to the asking price. Now, not every time are we needing to be at full price, right? So sometimes there is wiggle room, but it isn't reminiscent of 5 to 10% like it was back in just 3 to 4 or 5 months ago. So as a buyer, as you're engaging the market, expect to, if you're going to negotiate, expect to have sellers or experienced sellers that are looking to get close to their asking price. And I would also suggest that it's not also unreasonable what the sellers are asking. So they are actually pricing their homes at where the market is, but they're just willing to hold the homes longer for until they get their prices. So one reason that comes to the top of my head for that is that a lot of sellers who have bought, let's say, a year prior, like so 1 year or longer ago, is that they have the low interest rate, 2 to 3% interest rate, which is much different than the 7% interest rate that you would get now in the market. So because of that, their payments are lower and they can afford to allow time on the market, right? So they're not really as much in a desperate situation, because if they did sell their house, they would be going into a situation where they would be paying much more in the monthly payment, a lot of it being interest. So yes, you may have equity in the home, right? So, they'll cash out their equity. And let's say they even applied all the equity towards the next house, and they would, $600,000 home would say there's a $300,000 equity. They put the half, 50% down in that case. The payment on a loan of 300,000 at 7% would actually still be over 2,000 a month, which from when they bought it, let's say just give an example. If they bought it anywhere in the past, before 2022, chances are their payments might be even lower, either the same or lower or around that, right? So it's for sellers, they have less incentive to sell it quickly or take a big hit, or what they perceive to be a bigger hit, or or maybe just more focused on what they want versus just getting the property sold. So that's the first thing. And another thing too is that the interest rates is actually putting pressure on our buyers. So one of the solutions that we've seen with our home buyers and is becoming more prevalent are buy downs, and buy downs are actually basically requesting sellers to pay for a rate buy down, where you would essentially have the seller give you a concession, so they'd pay towards a closing cost. The buy down would be a closing cost, and let's say, for instance, it was what they call a 2-1 buy down. The first year you'd have a 2% less than market rate. So in this case, let's say the market rate's 7%, there'd be a 5% interest rate for the first year. So you'd be making payments based on a 5% interest rate the first year. The second year it'd be 1% less than the market, so you'd be at 6%. So your payments would be at a 6% interest rate in year 2, and in year 3 we return to normal, whatever the market rate is. And the benefit to that is, in the short term, it allows the interest rate volatility to kind of play its course. So it gives you about 2 years for that to shape out. And in 2 years, at the end of 2 years, start of year 3, if your interest rate is lower than the market, then you maintain that rate and you have a lower interest rate than what you would get at that time. If it's lower, then you would just refinance. And by the way, if you were to refinance earlier than 2 years, then any additional funds that were not used for basically your lower interest rate benefit would just be applied to like you wouldn't lose it. Basically, it would be applied to the loan, right? So it would close that out. So you would still be able to get that benefit of that buy down. And again, please check with your mortgage loan officer if you need recommendations for that. We do have them, preferred lenders that we could recommend you. But anyway, an option to make it easier for the increase in interest rates to purchase a home and carry the monthly payment. So with that said, what's interesting right now that's happening is that the contract ratio is at a number of 60 right now. And this is actually as of today. And how you measure that is you take all the pending listings, and a pending listing is anything that has a seller who accepted an offer from a buyer, and a buyer is under contract with that seller to purchase a home. And that you take that number and you divide it by the number of homes on market that are just available for sale that does not have a contract with the buyer, and you just divide the pending listings divided by the active listings, and you get a number. And that number for our contract ratio here in the Greater Phoenix area is the number of 60. If the contract ratio is between 30 to 60, then you're typically in a balanced market. If you're closer to 30, you have less buyer activity. If you're closer to 60, you have hotter buyer activity. And we just hit a figure of 60. Anything above 60 is actually considered a hot market for buyers engaging and actually purchasing homes. So now that we're at the top end of that range, and we anticipate actually that this will increase only more, that we are going to see prices potentially increase. And that's a very interesting thing to say, given what we've seen in the past 8 months. And typically a correction or maybe a recession would have a much longer period of a reduction. However, for now, based on the data that we're seeing, that we anticipate that we are going to see prices increase. The other side to that is also our active listings. So at a peak a few months ago, we had about 20,000 active listings, which was a fairly significant gain from about the 4,000 to 5,000 active listings that we had during 2021, 2022 for a number of months. And that was our low. And actually, that was a record low, at least in the past 22 years, having only 4,000 to 5,000 active listings in our market. The low inventory was the story of one of the major stories, plus the low interest rates really together is what caused the frenzy of the buying, which was the multiple offers. I would see, 30 offers on a property. One time I saw one where it got 100,000 over asking. And that's not even the most. There's some that have even been more than that. And imagine even in the luxury segment that I've heard of. So understanding that a low inventory was one of the major causes of why we had such a frenzy in the market and increasing pricing, we're actually headed towards that. And now and I'm not saying that we're in that situation right now. However, there's evidence that we're heading towards that. So what I mean by this is at the peak, third, fourth quarter, we had about 20,000 active listings in Greater Phoenix. And then since then, we have seen a reduction to about 14 to 15,000 active listings. And the story is actually that we are seeing a lower amount of active listings coming on the market. And it's not necessarily just because it's a seasonality issue, because we compare these numbers year over year, and we're seeing a much less amount of listings coming to market than we historically see. Give case in point, the first 5 weeks of the year, the median amount of homes that would come on the market as active for sale would be around 14,000. And this year, the first 5 weeks was around 9,000. And it's actually a record low start of the year in terms of new homes on the market than it has been in the past 20 plus years. So, with that said, very interesting dynamics, and the market, actually, the amount of listings continues to drop week over week. And actually, I've observed even daily. So, sellers are just less incentivized to sell unless they have to. And that's sort of my analysis on it is if a buyer or a seller is in a situation where they need to relocate, they need to downsize, they need something, some reason that's more of a need, or they just love a house and they just, this is a house that they wanted and they have the means to, then they make that move. So what you're seeing is much more motivation with sellers that are on the market. And, but the problem with that is there's just not enough sellers or not enough homes for sale in the market, really is what that translates to. So that's another reason why prices will increase, because now we're starting to see reduced inventory. And just by looking at homes in neighborhoods, it's starting to be reminiscent of finding few homes. There's less homes in neighborhoods that are for sale. In the past 6 months or so prior to this time, it was, you could see, quite a healthy amount of homes in a given neighborhood that are for sale. And now it's becoming much more difficult to find multiple homes in a given neighborhood that are for sale. So, and it's also, by the way, becoming a little bit more difficult to find recent solds. And that's in certain neighborhoods that I've observed. It's not everywhere. However, just some interesting things to think about. So if those trends continue, which one factor that has affected the buying rate in the past in 2022 was the interest rates. However, perhaps the market is adjusting to the normalcy of 6%, 7% interest rate, as that's sort of the average historically, right? I mean, you might have heard, in the 80s, interest rates were in the double digits, right? And, and so to hear that 5, 6, 7, 8% is abnormal if you've been in the market and observing maybe the past 10 years. Maybe not necessarily abnormal, but higher is probably a better word. And then, a lot of times there's pressure, of course, as we, as anyone buys a home, they tell their friends, they tell their family, and the market speaks, right? So the, media plus just the industry, the real estate industry, lending industry, speak towards the current interest rates. And so you catch wind of 2, 3, 4% interest rates, or just even 2 to 3% interest rates. 5, 6, 7 seems like a little bit more difficult, and the tendency is to want to wait. So here's my recommendation with that is that it is potentially based off of our current contract ratio, if that continues, that the bottom of the market was actually in the fourth quarter of 2022. And we might be recovering again any of the losses that were made since April of 2022. So we might be headed back towards those pricing, which, by the way, that was the peak for our city, our greater Phoenix area. That was the month we had the peak price per square foot for our the median price per square foot for our homes for all areas, all cities and types of property, from single family, condos, townhomes, etc. So we may be headed back towards that in increasing appreciation. So if you did buy in quarter 4 of 2022, then you timed the market. You bought when people were fearful, and that was definitely a very uncertain time. And technically, it is a little bit more uncertain still. However, we have enough trend lines to see that we're more than likely not going to head towards a crash. And so, and what shaping out to be the 8 months, the last 8 months of 2022 was actually more of a correction rather than a crash. It's a big difference between both. Crash would indicate 20% decrease over 2 quarters. And the correction was for Greater Phoenix was actually more like a 15% correction, 15 to 20, depending on where that was. And that was actually a 15 to 20% correction from April 2022. But if you take January, the whole year of 2022, it really just became a 2% reduction overall. So with that said, what is my recommendation for moving forward if you're a seller or buyer? If you are a seller and you're looking to sell your home, you're going to be experiencing a market where you may get multiple offers depending, but that you also may experience getting closer to asking price in a lot of cases, as well as perhaps some leniency in condition. Now, it does matter, right? So I will say this: it does matter how the house looks like, right? If the house is clean, it's presentable. And what I mean by that is that there's no obvious repairs that need to be made in the house. That it's cleanly painted and ideally move-in ready, even if it's not upgraded fully. That you're going to have a high chance of selling that property in this current market. And by the way, the listing success ratio right now is in the 70s. It's around like 70 to 73 or 74. And that's our low is actually closer to about 50s, in the 50s. So we're having, if you basically have a 7 out of 10 homes are selling that are listing on the market. So at one point that was 6 or 5 homes, half of the homes weren't selling or just kind of sitting on market for a while. So with that said, you're going to have a lot better chance of selling your home, and you're going to have a lot better chance of selling your home for the terms that you want. Although there are probably still going to be some give there. More than likely, it's going to be in the buy down, and I would not recommend avoiding that. Right. So helping the buyer of your property to purchase a buy down, if possible, is going to help, because that's, from my understanding, that's really the only way they can get a buy down is if the seller gives that concession. So buyers, very interesting market, and just came out of having to look at 7% interest rates is a concern. But with that said, we may be in a situation where it's also still just emerging out of the low. So again, everyone has to take their own risk, do your own due diligence. However, it might be an opportunity to still capture an entry point where you are buying lower than it would be in 6 months to a year to, the next, let's say 2 to 5 years. And if that's the case, then this would be a great time to buy. And there's a lot of talk out there. Maybe I should wait. And it's, they say, when are the best times to purchase a home? When should I buy real estate? Right. It's, they say, yesterday, right. Or 10 years ago. And the second best time is now. And so, another saying is, don't wait to buy and wait, and being in the market, long term, typically, historically even, will bring about appreciation of your property if you can hold it over the long term, right? We're talking about 5 years plus. And that's generally how real estate works, right? And what's interesting about 2020 and 2021 is that it kind of turned real estate into a little bit of a stock market, right? We're trying to time the market, get in there and get quick appreciation, and maybe come out of your investment and try to make money. And a number of people did. I've had home sellers and home buyers experience that, significant appreciation over 2 to 5 years of holding, record, really. So with that said, of course, it has to make sense. So definitely run the budget. What's the comfortable payment for you? And then we can match that up to see if we can make that payment happen. And also having a larger down payment obviously will help. But right now you can get in with about 5% down on a conventional loan, 3.5% on an FHA loan. So there are options out there, and then it just becomes down to just ensuring that you have the right team to support you in terms of the acquisition of the property, running the numbers and the recent solds in the area, and having that local expertise, or at least the market data for that local area. And we would love to help with that as well. So that's what my team and I we work with. We work with home buyers and sellers all throughout the valley. So you can Gilbert, Queen Creek, Santan sold a house last was it fourth quarter of or third quarter of 2022 in Queen Creek, and then we also sell homes in Buckeye. So and then also of course Vistancia. So we cover Vistancia, Peoria area, Scottsdale. So we cover basically Greater Phoenix and the surrounding cities. So hope that helps. It's a lot of information, and definitely would love to chat and make it more specialized to you or what your needs are. I talk to a lot of people with varying interests and goals in real estate, whether you are buying a second home from out of state to needing to downsize, to upsize, first time home buyers, work with a lot of first time home buyers, to investors, fix and flip, and also buy and hold, long term hold strategies, short term rentals. So there's quite a number of clients that we have worked with, 1031 exchange. So, whatever your situation, would love to chat with you and help you towards reaching them. Hope this has been helpful. Thank you for tuning in to my first LinkedIn Live video, and I hope to see you next time.